Hello, everyone. Today's main talk is about central bank digital currencies. To understand this better, you need to grasp how financial transactions function today. When your money is in a bank account, you can use your debit card to make purchases or transfer funds to another financial institution or account. Each time you do this, there are intermediaries involved, and each of them charges a fee. This is why fintech has gained so much interest in recent years. New technologies enable faster information transfers and, consequently, quicker fund transfers among parties. In this landscape, there's room for new technology to replace or streamline these intermediaries, reducing costs. For instance, wire transfers or account balance transfers can cost you anywhere from a few dozen dollars to a percentage of the transaction amount, like credit card fees. A central bank digital currency, as traditionally envisioned, coexists with paper and coin currency, much like current digital banking. It isn't independent and doesn't trade independently. It's functionally pegged and can be exchanged for traditional currency. Thus, it doesn't imply additional government control. In fact, in Europe, paper checks disappeared over a decade ago, and the United States is finally catching up. So, there's potential to apply this technology forward, but the real changes we'll see in the next 5 years will be truly dramatic and could disrupt the fintech space significantly. What the U.S. Federal Reserve is currently doing with SET, Secure Electronic Transfer, allows instantaneous clearing of fund transfers using the Fed as an intermediary, and it's free. In this scenario, competition like Zelle or Bitcoin can't compete with something that's both free and instantaneous. So we may see the entire fintech space transition from being exciting to simply dealing directly with the Fed once they finish building the infrastructure. When that happens, clearinghouses between corporations, unless they have something to hide, will likely use the Fed because it's cheaper, faster, and safer. This could lead to a reduction in discussions about alternative currencies, because many of them won't have strong use cases anymore. If the Fed makes everything free, even some marginal use cases might disappear. So, the topic of central bank digital currencies isn't as sensational in terms of government control as it might seem. The Federal Reserve lacks the staff and infrastructure to manage all transactions as some might fear. This is very different from what's happening in China, where their digital currency is tied to their social currency score, creating a more Orwellian scenario. However, implementing such a system in the United States would require significant legislative and infrastructure changes, and there's no current indication of that happening. If China's system succeeds, it could put the entire financial space under government control, potentially stifling small businesses and dynamic economic activity. Whether they succeed or not remains to be seen, but they are certainly attempting it. That's it for now. Goodbye.